the way to minimize risk is by educating yourself. So if you're really well educated, then you don't have to account for that risk. So you can.
Welcome to Learn With Us, brought to you by 303andU. We are a team of 4 non-financial advisors who are exploring a revolutionary new financial approach that goes beyond money to prioritize your emotional, mental, and spiritual well-being. Through weekly meetings and engaging podcasts, we strive to help you improve all aspects of your well-being as well as ours. Come join us on this journey of growth and self-improvement because at 303andU, we believe true wealth extends beyond dollars and cents. Happy learning!
Hello, everyone, and welcome back to Learn With Us, brought to you by 303 and You. Today, we're going over Retire Before Mom and Dad, Part 4, Investing. And it was a doozy.
Very dense.
Very.
Very.
I understood maybe about 40% of it, which is more than the first time, so I'm getting there.
Yeah,
Little by little.
I was listening to it and I was thinking, this is just a lot of information.
No, he even tells you that you're going to have to come back and read it a couple times. There's no test or nothing, but it is lingo or whatever you want to call it that you should know for sure.
Most definitely.
Yeah, he says life it's an open book test anyways.
It's true. Only no more cheating. Well, for some. First, he just goes over investing, which in general is talking about how if you don't know what you're doing the investing for, then it makes no sense or has no value. Which I took that was pretty deep. He used the Lost reference. I've never watched the show. Have you guys?
No. Yeah, I was like, I don't know what this guy's talking about right now.
So after that, we jump right into stocks and bonds. I had to write up a little thing to help explain it or break it down even more.
Oh, you
Yeah,
mean a
so-
cheat sheet?
Yeah, is that the thing you sent? I was literally just pulling that up just now.
According to my research, stocks are basically like owning a piece of a company. So if the company does good, you do good. That's why you have to pick companies that you know are always growing.
You own a tiny piece of the pie.
But then bonds are just basically a loan and that it's guaranteed to be paid back. I mean, unless they go bankrupt, but usually paid back or even backed up by the government, I was seeing. Thought that was pretty cool.
Yeah.
They both have their advantages and disadvantages, though, as we go to find out.
Yeah, stocks are more volatile, but they give a more return on the long run.
Yeah, they do
Bonds are
better.
less volatile, but they give less return.
And then you have, is it the mutual funds? That's a bunch of companies all together.
Yeah.
Which
Yeah,
I like those because you don't have to sit there and be like, oh, let me pick 100 individuals on my own. It's like, no, just buy this mutual fund and you have all of them.
I mean, I've always heard of the S&P 500, and I thought it was like a NASCAR for some reason. That's like, I don't know why. That was like, I always pictured it was like something weird, and then like, it literally means 500 stocks. Oh, that's awesome.
500 companies, it means.
Or 500, yeah.
Yeah, that's wild. It's wild that you can do that. And let's say, for example, you want to start, like right now, biotech. It's kind of hot, right? So you want to start investing in biotech, but you have no idea what company is good or bad. You just invest in a biotech mutual fund.
Mutual funds, I feel like, is the safest way, but my fear is, how do they pick them? They're just going off of old history? Are they going off of someone sitting there? Is it just, I mean, nowadays there's probably AI ones that just pick every stock for you.
Mm-hmm.
That's my biggest fear with them.
No, it's by the year. They, in a way, they try to predict. Actually, no. I'm sorry. I'm getting confused. No, I think it's live data by the end of the day, right?
Are they always switching the 500 companies? Like,
Yeah.
Mm-hmm.
Yeah.
Yeah, if
Oh,
one starts
really?
tanking, they pull it and add another one.
That's the beauty, that it does it automatically for you.
oh, I guess I assumed it was like 500 screwed in, stuck.
No.
But it's always switching in and out.
There's a script that controls them. Yeah.
Well, that's a little safer then.
Oh yeah.
So if you're like us, all this is probably not making great sense, but there's a way to make it easy. as we learn in the next chapter. And that's with these four main goals. You have to diverse, which means don't keep all your eggs in one basket, which we've used from almost every book now has told us that. So I'm going to say we should definitely diverse.
Don't put all your eggs in one basket, right?
Well, it depends.
Oh, you have a. No, I heard that there's a stock guy who literally has two. He's one of the richest men in the world. He says, don't diverse. You're wasting your money.
Well, diversifying is to protect you from loss, to protect the risk. But if the way to minimize risk is by educating yourself, so if you're really well educated, then you don't have to account for that risk. So you can, what you call it, like specialize, I suppose.
No, yeah, you almost have to become your own. As he says in other chapters, that it costs you money, even. Not only does it cost you, like, the fear that you're having, but it's going to cost you more years of work if you don't learn.
That's a good point. Yeah.
The word
What page are you in right now? You left us behind, bro.
Yeah,
equity.
I didn't want to get into too much because, as we say, we are not financial advisors, and all this is definitely work you have to put in. We can't
Yeah.
do it for you.
Mm-hmm.
Well, I feel like a lot of those things that he goes over, it's like all we can really do is read the definitions that he puts out. Are you talking about the second one, Connor?
Yes.
Yeah, equities.
He says the main point is we want our money invested in stocks more than we have in bonds. Well, what is the reason? I guess I'm. That's where I'm getting
You're less
confused.
likely to you'll make less money in bonds, won't you? Or
Oh no, equity refers to that like ownership that you get over the company. So
Oh, so
having that
bonds you
own,
own nothing.
yeah, that's right, exactly. Oh wait, no, no, no. This is not equity. This is equities. Sorry, eliminate what I said.
So what's the difference then?
Equities would be stocks. I agree, though. I think stocks are better than loans because loans you also get stuck at the rate. Let's say if you give out a loan for 5%,
well, that's what I was just saying.
and yeah, so
Let me go ahead. Yeah, if you give out a loan at 5%, you only still make the 5% versus even if the market goes up to 7%, correct?
And they're like contracted for 10 years or something, wasn't it? Or is it longer?
Right?
It could be up. He said one was like 100
yeah, it
you
can
could
be.
do. I was like, what? You're like, here, kids. Hope this works out.
So what's the third one?
Then we go to low cost, which, I mean, that's obvious. Every dollar you spend is going to hurt your financial freedom. So anywhere you want to always keep everything low cost.
Mm-hmm.
And then keep it simple, basically, is the last part. But he says simplicity. But like I'm saying, keep it simple because if
Hmm.
if you don't understand what you're doing, then you don't care why you're doing it, as we said in the beginning.
Yeah, and the more complicated it is, the more chances you have of messing up too.
Oh, I didn't even think of that. If there's a unneeded, you're adding more risk for no reason.
Right?
This next part really had me a little scared was retirement because I
Yeah.
still haven't started and I feel like I should have been. I keep saying every year I got to.
Well, aren't you started in stash?
Yeah, but I don't have any of like isn't there actual retirement programs out there as he goes on to tell us?
You mean like 401ks and stuff?
Vanguard and stuff like that.
Hmm.
I have, yeah.
I mean, I guess
No.
that's if you want to use those.
Yeah,
Those are
there's
just options,
products,
right?
right?
Oh, I guess you're right. You don't have to. Maybe, yeah, maybe I'm still stuck in that 40-year work life where I've always heard that's the way to go. Vanguard and them.
It seems to be the safest way to live it. You know, you stretch out your life far enough so that there's not much pressure to amass a lot of money. By the time you retire, you should still have some physical strength left so that you can enjoy your golden years.
Which sounds horrible.
I gotta be honest, same. I think the same thing.
You finally have worked your whole life to now pretty much sit back and watch the world go by comfortably.
Yeah, you're gonna keep traveling, farming.
Even, yeah, whatever your thing is, eventually your body won't let you, though. That's the worst part. Like, say you did love hiking, eventually it's going to get steeper and steeper, and you can't do it anymore.
That's true, but dude, I've seen some 90-year-olds that are still doing squats, bro.
So I guess maybe it's a mindset. Maybe
It's
those people are retired in their head, so they retire in their body.
I think it's 100% mindset. Yeah, for sure. This is really, really heavy duty stuff, dude.
Yeah, I know. It's
Wow. I say we just go through the topics one by one as far as we get.
yeah, I
All right. So let's see. The guy wants to diversify because he says you don't want to take time to learn the markets. Since you don't want to do that, just diversify. That way, your risk will get reduced.
and it becomes literally a 30-second, maybe a minute thing that you have to go and sign up for. It's not a sitting here for 5 hours doing the research.
Dude, he also talks about Morningstar, which is a website you can visit to learn about stocks.
Have you ever used it?
No, I use Finbiz.
Same idea though. I've never been on any of those.
Yeah.
What do? They tell you about which stocks you're looking up?
Yeah, they track stocks. They track tickers,
So basically, like the history of the stock and what it did.
literally. Yeah.
Literally every. Oh no, that's cool.
That is pretty cool.
As he's had a pretty cool quote. I don't know where it was, but he said history doesn't repeat itself, but it's often consistent or something like that. And I was like, that's true. It's not going to copy, but seems to come in waves.
For real. Let's see. What else does he talk about? He talks about. Well, reading all this, what did it move you to do?
Well, basically, I guess maybe that might be the simplest way from this point on. But just to sum it up, so we're not here trying to bore people to death. What I got from it is that you have to put in more work because you can't just hand. I always plan on like getting to a certain point and just handing it all off and never thinking about it again. But he's saying that this is going to cost me years and years of my life, and that defeats the whole purpose.
Yeah, that's a good point.
That's one of the major things I took away for sure.
But doesn't he also mention you should check it like once a year? I don't remember if it was in this section or a different section that he said that. Yeah, you
Yeah,
have to
but
constantly research them and
but you have to do that yourself.
oh yeah,
I
of
mean,
course.
or you don't if you don't want to. That's the thing you're saying.
But then
If
you're
you're worried
paying
about
somebody
time,
and you don't want to pay
yeah,
somebody.
time to money ratio basically.
Yeah, he talks about this time limit. Like there are these bonds, not bonds, mutual funds that you buy, and they have a target date retirement. So let's say you want to retire by 2050, you buy this.
Oh, it's every 5 years. He said it comes in. I was just reading that.
Yeah,
In
they get a new
5 year
one.
increments.
They take a new one, and then depending on how far you are from your target date, it changes the risk. So it diversifies you or rediversifies you. As you get closer to your target date, then they reduce the risk, like they sell more stocks and buy more bonds and stuff like that. It's kind of fascinating because you just buy that one ticker and then you literally just forget about it. You don't need to rebalance anything.
Which to me is scary personally, but everybody has their own preference. It's like letting someone else drive on a racetrack. I
Well,
think
it
I'd
might
want
not
the
be the
wheel.
only ticker that you buy, but maybe it'll be one of them. Because he does recommend to split up your portfolio.
Oh yeah, I'm definitely not against putting in $5, $10, whatever, a chunk into there, but I'm not relying on it 100%. I have a mutual fund, like I hope everybody does at this point. Oh, have you ever looked into your workplace retirement?
Yeah, we have
Yeah, it
it.
sucks. I gotta
Oh
change
man,
workplace.
that's bad. Is that the key
It's
to
just a
fix it?
401k.
Yeah,
I mean, I don't know. 401ks are kind of, I guess, to each their own. I don't think
Do they
to a
match?
certain percentage, but you can make more money off stocks than you can a 401k, can't you?
probably. Yeah, because the 401k somebody else manages it for you, and you have to pay them,
Yeah, and then when you cash
even
it
if they
out,
lose money.
Then when you cash it out, you have like to pay a bunch in taxes.
No, that's what I was just gonna say. I feel like you get
Oh, but
hurt
even
bad
if
on
you
that.
buy stocks, you'll still have to pay taxes.
Well, yeah, but aren't 401ks like really high? Or maybe
No,
stocks are the same.
no, it's the same. Yeah, taxes are unavoidable. You either have to pay taxes or you'll have to pay fees.
Or
One
time
or
in
the other,
jail.
or time in jail. Exactly.
And then you won't get to spend your money
Yeah,
at all.
Cost you something.
I like that third one. I never thought of that. You'll have to pay taxes or fees or time in jail.
Have you guys ever checked into the HSA health savings account?
I
No.
haven't, not yet.
No.
No, that one made me feel like I should be doing that too. Pay it's tax exempt from all your bills,
Oh,
nothing
yeah,
you
that
Yeah,
one.
as long as they're medical.
well, that's awesome. Like
Yeah. Yeah, I feel like that's not a bad one to have.
Yeah, that one's definitely that one's very attractive.
that comes from the plan and retirement accounts. There's 5 easy steps. Contribute enough to your Roth 401k to get the company match, which then you're gonna max out your Roth IRA, max out your health savings account, finish contributing to the maximum to your Roth, and then invest the remaining into taxable accounts. Oh, so there's accounts you have ready and set up just for taxes?
Is that like stocks and stuff? What does he mean by that?
Yeah, that's what I was.
Like accounts that would get taxed once you pull out your gains?
Oh, he has it right here in the breakdown. Once you've maxed out all your available tax advantage accounts, a taxable account is last in line. So it must be you're supposed to set up accounts that the government won't tax you super hard on first, and then as a last ditch effort, invest into the ones that do get taxed
Yeah, I'm
with the
thinking like,
remainder money. Wow, I cannot say
yeah,
that
maybe
word.
that is like stocks because when you cash out your stocks, you pay taxes on your gains. So I'm assuming that's what he means.
So you try to invest in the ones first that don't tax you heavy on your gains, and then the ones that do. It makes the most sense though, if you think about it. I mean, you don't want to be getting hurt in the end just because it's going to make you slightly more money. It's really not if it's going to cost you it at the end.
This part of the book definitely needs to be read.
You guys put the U in 303 because we can't do it. It's just, even if we tried, you would just hear us rambling on and on. And
Yeah, if you don't read it and look at the words, I feel like you're not going to really know what it's talking about. Because as I was listening to it, some of it I'm just thinking, I don't know how to explain it.
I mean, there's
Because like you're,
literally charts in here. Like, go get it from the library. We're not about spending money.
oh yeah, that's
It,
true. Is that how you guys got yours?
yeah. Although they want it back now, and we're being very rude.
Billy, you didn't even have this book until we came along.
Yeah, but like we made you get it.
Chapter 25 is my favorite. Just the end. His 3 key takeaways are just do it, just do it, just do it. Like, get started. What are you
And
doing?
Nike didn't even pay him.
Yeah, the quote that's at the beginning of this chapter, which the chapter is also called Let's Do This. The quote is the best time to plant a tree is 20 years ago. The second best time is now. So if you're like, man, I should have started investing 5 years ago, 10 years ago. Well, even though you didn't, start now. That's what I think all the time. I'm like, man, I wish I would have done this sooner, but I'm like, at least I've started now because if I didn't start now, I'd be even further behind, you know? So
Yeah, imagine
start now.
being 10 years older and saying that. Be like, oh man, I should
Exactly.
have started. That's one thing we don't have to ever worry about, I guess. If it works or doesn't, at least we tried. Oh, and our biggest enemy, which if we, I'm pretty sure we've all come up with this conclusion now, is us or you yourself.
Ooh, tell me more.
It's one thing to shoot yourself in the foot, just don't reload the gun.
Which kind of goes right with the best time to plant a tree was 10 years ago. The second best time is now because it's like, hey, don't shoot yourself in the foot. Plant that tree.
But don't wait another 10 years and say it again, so don't reload the gun. It works out.
Yeah.
I get what you're saying.
Yeah, you shot yourself in the foot by not starting sooner. Now don't reload it and do it again.
But that's it basically. You get in your way most of the time, and you're the one who's not starting, you're the one who's not learning. There is no one else.
Yeah, a lot of times we try to wait. We're also like waiting for that person who's gonna guide us and show us the way.
Or waiting for the perfect time.
Hmm. But there's no such thing.
The perfect time was 10 years ago.
That's right.
Longer for some.
The biggest risk in your journey to level 7 is your own fear and greed. Both can cause you to make investment mistakes. The key is to stick to our investments, plan through the good markets and bad. To help yourself do this, never stop learning. The three concepts.
Yeah, I like the to help yourself do this, never stop learning. Let's see, this paragraph in the book says life is difficult. This is a great truth, one of the greatest truths. It is a great truth because once we truly see this truth, we transcend it. Once we truly know that life is difficult, once we truly understand and accept it, then life is no longer difficult. Because once it is accepted, the fact that life is difficult no longer matters. Sticking to an investment plan is difficult.
I got lost in how many truths you just said.
So, sticking to an investment plan is difficult, but you need to do it anyways. And I don't know, I feel like once you get started, it's not nearly as hard.
And as anything, as you start, like it might be weird at first, but the first couple times, and then you're going to be excited after a while.
Technical difficulties.
Oh, that's what we were talking about. Sticking to a plan is difficult.
Yeah.
But I feel like sticking to a plan is the same as like any routine you have in your, the same reason you make your bed or do anything. Like you have to invest, you have to pick up your house. Like it's just the rules of life.
That's true.
Yeah.
There's really no way to build wealth without investing, without having money work for you. It's just the only way. If you don't get money to work for you, then you'll never.
And stop getting in debt. Those are the two. Don't make it go the other way, basically, because debt is the opposite of investing. I feel like everything has to have
Yeah,
a.
it is.
Yeah, that is like sabotaging your future self.
As we've
Very
talked
true.
about before, that you're your shadow from 2 years ago, so debt is literally your shadow coming back to haunt you. How fun was that thing you bought 2 years ago and sits in your garage? It's still there. And never stop learning, as obvious. I mean,
I was just reading that.
I would hope. Especially if you're on Learn With Us. I mean, you're here to learn.
I like how he says, you don't have to be a money geek like I am, but don't stick your head in the sand.
No, that makes sense. There's a happy medium. You don't have to go full on, but there's no point of hiding and pretending it doesn't exist.
Yeah, at the end of the day, if you don't take care of it now, your kids are gonna have to end up taking care of you, and eventually they're gonna get tired and send you to a house, and then you'll die.
So getting help means learn. There's no other answer for getting help. You have to learn yourself. You can ask, but that one cost him over $40,000, which took away over $1 million in the long run from him. If you do the investing with
Oh,
help.
yeah. Here's where it talks about the commissions if you end up paying somebody. That's what he was saying about some investment professionals earn fees through commissions paid to them from the investments they sell you. So if you have somebody do it for you, then you will be paying them. So just remember that is going to cut into your retirement, and it's going to affect how quickly you're able to hit your goal. Which I mean, I don't really feel like it's necessarily a bad thing, but you just need to be aware of how much it's pulling
No, that's all he says
from your
too.
investment.
No, he doesn't say there is a right or wrong way to doing this. He says that know what
You
it
know, I
costs
feel
you.
like you could
No,
even
at
have,
first he said. At first he said, yeah, don't pay.
yeah.
But
I
now he's saying if you want to, like, if,
Know what it costs.
I don't know.
right?
I feel
Didn't
like
he?
you could do
No.
it. I feel like you could do it for like, I mean, do it as long or as little as you want. But I mean, even if you went in and you have to find a good one though. Make sure you find a good one.
No, that is something you need to
And
shop around. It's not you don't go to the first guy and be like, "Here's my money, take it, go."
yeah, because some people are just out to make a dollar for themselves. Um, but I mean, even if you did it for, first 1, 2, 3 years, to learn more and maybe get your feet wet and figure out what you're actually doing, that would maybe help you. And then you could always get rid of them after you feel comfortable taking it over yourself, I
No, that's a
suppose.
good idea because you could see the profits and be like, "Oh wow, he can really do that. That's a thing."
Yeah, and a lot of people, well, not a lot of people, but like Warren Buffett and Charles Munger, they say that having a lot of money a lot of times kind of keeps you from taking advantage of really good opportunities, because once you get a lot of money, then you have to focus on large companies. But then large companies very rarely make big moves. Like they're on a
Oh.
solid climb, right?
Mm-hmm.
But if you go to a low cap company, let's say a company that just started and hasn't created anything yet, but it's on the path to creating something very, very useful. See, if you have a lot of money, you're never going to notice that company because you just don't have the time to worry about it.
Or do the research
But
to see how it's
even
gonna grow. Or
even if you just won't, because you won't focus on those kind of companies.
You're
But
focusing on
you
larger
have to focus.
cap.
Exactly, you have to. So if you get help from somebody who can help you focus on those smaller caps and help you find those good investments, then you're not going to see 10% returns. You're going to be looking at 50 to 100%
oh,
returns.
it's like the rat race game where eventually you jump out of all that and you're only worried about buying companies at that point. You're not worried
No.
because you're
Not
not
necessarily,
all
but yeah,
you
that's
well, I just think about how, we do all that stock and we're like, "Oh, but we made all that money." And we're like, "Yeah, but that's nothing compared to what we're about to do." So you don't worry about bringing that with you.
I get it. Exactly. You're like you're making an investment because you know that later on when you don't need the guy anymore, he will have set you up.
No, I guess I haven't really
Dude,
put that together yet myself.
another thing that I would like to say, well, and this is not advice, but I heard this from someone else, is if you're going to go to a financial advisor, go to a few. Don't just settle for the first one like you guys said, and then make sure that your advisor has the spirit of a teacher, not the spirit of a salesman.
Oh, no, that's what Alita was saying earlier, that they're literally out there to get you. They're out to some. No,
Some
yeah,
of
not
them,
everyone.
they're there. Maybe it's not to get you, but they're there to make a dollar for themselves.
Well, yeah, they need to get paid. They need
I
to
mean,
get
yeah,
paid, but
everyone has to get paid, but there's I'm going to teach you in the process of me getting paid, or it's I don't really care, give me your money so I can get paid.
So as Juan is saying, you need to go to 2, 3, and you need to find the one that's like, "Oh, hey, well, yeah, I'd love to. I mean, I don't really have. I only take 10 customers a year." Not the guy who's like, "Oh, I'll take 100 people. I don't care. I can handle it." He's just
Mhm.
in it for the money. I feel like that's the way I did my taxes too. We did a little bit of looking around. Didn't want.
Dude, well, I get what this guy's saying. He's saying, dude, you want to make sure that you do this as fast as possible, so you want to spend as least as possible. But the thing is that, okay, for me, I want to do this as fast as possible, but at the same time, I want to make sure that it's as sound as possible also. I can think of myself going to the gym. I could do that by myself. I could learn. I could become a personal trainer and train myself. But it's never the same when you have somebody else next to you looking at your movements and giving you like an objective feedback.
No, yeah, I get
If
what you're saying. You're thinking I'm doing
right?
these
Immediately.
the best way possible, and the guy's like, "What are you doing? You're not even hitting that muscle or whatever." Like they're
And that feedback is invaluable. You might be saving 1%, but hey, you're just buying companies that give you 10% yearly. But look, this guy knows of companies that are about to explode because they got this new medication. Huh. Might be worth looking into them, but you'll never find out if you don't have somebody advising you.
funny. You're blowing my mind right now, Juan.
I'm blowing your mind. What? Tell me more. Tell me more. What do you mean?
I guess I got I get reading these books and I get so one-sided almost. I feel like I don't objectively think about it. So I'm like, "Oh, that, this guy's making sense." And here you are like, "Wait a second, it sounds good." And it is good, but then again, like you're saying, the best basketball player needs someone to tell him, or I guess boxing's a better one. The coaches are usually not pro
Dude, I
people,
love
but
that analogy. Yeah.
they are the ones that teach them. You know, without a good coach, you'll never have a good boxer.
True.
And I bet your ass that no freaking gold athlete has a coach that does it for free.
No, so that's where it comes in that you need to figure out, is the cost worth it? Like if it's half a percent, well, oh, that's going to take you an extra 2 years or 5 years, but that 5 years, you're going to be twice as rich. Then it's worth every 5 years. It's worth the 5 years of extra work.
Yeah. I think what's the key point is that he says in the long run, mutual funds outperform actively managed funds. But in the long run, and it is true, I think it's like 80% also, 80% of actively managed funds underperform the market.
Do you think that's because it's
So
not their money? So they're not like, if it's your money, you're looking every day, you're caring more. This guy's like 30% caring.
I think oh, interesting. So I'm gonna go for the simplest explanation, which in this case is just a standard deviation. When you go to school, you only get a few people that are the best in that get all A's. So those are the 20%. Everybody else, the 80% are just like the C's and D's students
But they all
that make
graduate
it.
though. I get what
Yeah,
you're saying.
they make it, but they made it very barely made it.
I like that. No, that's perfect because then, yeah, like you're saying, so there is going to be more of them, but they're out there. There still is that A student that loves every minute of it and studied hard.
I believe that with all my heart.
No, yeah, it's almost has to be statistically.
What more can we say? Oh, hold on. So let me. I have a question. So I think it was a couple, maybe a year ago. You would. Oh, but you already changed. Okay, I'm gonna ask it anyways. So remember what it was that made you change your mind, or if you change your mind regarding whether a person should either just pay debt and invest, or do both at the same time. Remember that you
I
would,
I mean,
if you
I'm
just wanted to
still
pay the debt.
I mean, I don't practice it, but I still believe that's the best, and I don't know why. I don't know if it's like some old mindset I have, but no, I still think that way. That if I had the money right now, like say I found $50,000, that I wouldn't be like, oh, I got to split half of it with my debt. I mean, I'm going to put it all to debt first, then the rest is going to investing. Not that I have $50,000 in debt, but I'm just using that as an example.
Gotcha. Yeah, yeah.
I feel like it would be better to just pay off that 50,000, and then from there on, every dollar I make, I'm putting straight into investing because I know I can live minus all these bills. I've been doing it. So once those bills are paid off, then all that is going straight into invest.
Yeah.
That's my thoughts. What's your opinion on that then?
Uh, it would depend. Yeah, to me it would depend. I would try to leverage debt as much as possible before paying it off.
No, that's a major thing.
Just
You can call, and that's a real thing. You can call them and say, "Hey, I have a plan and this is real." Like we learned in the last book, like they will listen or help you or accept it. Some will accept less just because less is better than nothing.
isn't that
Yeah,
crazy?
yeah, people are like, "No, they won't." They're like, "They will," because they're like, "I'm
Yeah,
not gonna spend all this money trying to track you down and all this. Like, give me something and call it even."
yeah. It's at the end of the day, it's a human system. There's humans on the other side of the phone line, so
Be human.
you can argue. Yeah, you can talk to them and explain your situation. They'll do anything to get
No,
paid.
they want your money as little as much as they can. Like, and we say that with internet companies and stuff. You go to quit and they do the same thing. They're like, wait, why? Yeah, I can't afford this. They're like, but if I give you this new deal for the next 6 months, can you afford it? You're like, yeah, I guess. But you're like, you could have been doing this the whole time.
Hmm.
So I guess it's definitely best to start investing. You can't argue that. I can't. At the end of the day, you can't argue start investing now. Yesterday, 10
True.
years ago.
True. And I guess another thing that should it's worth mentioning is that if you see yourself in the hole, if you think that you've dug yourself so deep and you owe so much money and you're so far behind, there's still
No,
options.
you can literally claim bankruptcy. Like, that's not a joke. You get 2 of them in your
That's one of them.
lifestyle or your lifetime, don't you? I feel like. But even just the
Before
one.
people start saying, "Oh, what are you doing?"
But even just the one, you shouldn't ever need it again. But like, say you have spent your whole life in the blue pill and everything was great, and now you're like, oh man, I'm done for. But go do that. You know, when we did it, we didn't even lose our house or nothing. Like they didn't come out viciously trying to find every dollar and took our TV away or nothing. Like, I mean, I didn't do it, but it was just for Amanda from her past life before.
How was your experience going through that? Yeah.
Everything I witnessed from her was that it was very. They want to do it just like you're saying. They're human too. They're like, they get paid. It's not a free service, so they're like, okay, let's do it. And they'll help you every step. They'll get you the paperwork. They were trying to make me do it too. They're like, oh, you owe this much. Oh, well, why don't you just do it? I'm like, whoa, I'm not that bad yet.
There's a salesperson, gotcha.
Oh, for sure. She's good. At least this one was. Tried to convince me.
Dude, we never explained what a small cap and a large cap company is.
I feel like that's homework that the audience needs to do, for the reason that if we explain it, they're gonna forget. It's something you need to put the homework in.
I like that. But that's basically refers to the market valuation.
I mean, if you have a simple way to, I'm always down for a simple explanation.
Yeah, so the market cap refers to the market valuation of the company as a whole. So whatever the company is worth or we think it's worth, that's the cap. And there it's measured in millions of dollars, but actually billions of dollars, at least in the US, because the US don't joke around, son. So you get like large caps. It's any company that's worth. So like a small cap company, it's so small caps are any company that has a market value capitalization between 300 million and 2 billion.
Holy,
Holy cow.
that's small.
Talk about that's small,
Oh,
bro. That's small. And then a large cap, anything over 10 billion.
that's not even like real numbers.
I know they sound like fake numbers.
So that's gonna do it for this week. Come back for part 5, practical considerations. It's 6 chapters, basically the end, the conclusion of everything we just
Whoa.
learned. So this was intense. I don't know what else to say. Like,
A lot of information.
I feel like we're gonna have to keep talking. Well, we're gonna keep talking about this kind of stuff anyway.
no, and as we get better, we'll be able to explain it better. That's the dealio. Learn with us is because we're not learned. We're not learned yet.
We're not. Please learn us.
Well, that sounds like good English. That wouldn't be proper. We haven't
I like
learned
it. We
yet.
haven't learned. Yeah,
So that's
No, we're not learning.
we're not learned. Yeah, I knew we weren't learned, but I did not know we were not that learned.
no, and that's the thing. I thought we were a little more. I thought we were almost financial people, but now it's like, oh no.
Yeah, no, we're still in the rat race.
That's true. It's hard to talk about it when you're still in it.
Soon though. Soon.
I hope to see everybody then. Bye.
Bye.
Peace.
See you later, alligator.
Thank you for joining us this week. We hope you've enjoyed our discussion and found it both informative and entertaining. Please stay connected with us and continue the conversation on our social media. You can follow us on Twitter, Facebook, YouTube, and TikTok. You can also catch us on most podcast platforms and catch up on previous episodes. If you have any suggestions or topics you'd like us to explore in the future, we'd love to hear from you, and you can reach out to us via email at 303nu@gmail.com. Don't forget to leave us a review and share the podcast with your friends and family if you've enjoyed what you've heard. We will be back next week with more engaging topics and insightful conversations. Until then, take care, stay curious, and happy learning.